Hello and welcome back to the Stocks with Tuskys YouTube channel for our portfolio update for the 2nd of October 2021. Now our simple return this month is 10.58 and that is down from 12.7 from the last update. I thought it would be helpful to start pulling this up at the start of the video so we can actually see a breakdown of where I'm making and losing money here. So I have unrealized losses of $68, which when we get into the individual companies you'll see what sort of happened there. Realized gains in the past of $1,121. Unrealized currency gains of 113, and that is because the US dollar has tanked against the New Zealand dollar at the moment. I have a policy, well, since I found out about it, of only buying US dollars when it's over 70 cents. And I did buy a whole bunch back when we got up to 73, but earlier before that I was buying somewhere around 68 cents and have locked in a bit of a loss on currency, but that's fine, that is what it is. And transaction fees, yeah, this adds up, all those little 0.5% on your transactions. This is why you're better to be a long-term holder rather than constantly buying and selling, which I didn't know when I started either, but that's fine. And we have dividends of $129, which is at least partially offsetting the transaction fees. Now, heading down into the positions. A2 milk, this kept dropping. We hit quite the low there for a bit, and I made a large purchase to average down, and we have rallied a bit since. We also successfully managed to bully till 7 figures into buying a wee bit of A2 milk stock. 2 of those votes on his live stream were me and my wife on our phones trolling him. Joke's on me though, because he's actually up on his position and I'm still holding the bag. So what I'm doing with this is basically I'm just going to keep averaging down, probably not too much more. I do like the company long term, but I'm waiting until I hit my break even, and then I'm going to trim the position back to a more reasonable size just so I don't take the loss. I did something similar when I realised I'd made a mistake on Z Energy back in the day and managed to get out of that at my break even when it rallied a wee bit. Firm holdings. I didn't write notes on this one. That was a bit silly of me. I've added a wee bit to it. Would like to see it under $90. Would be nice. Might not happen, especially not with the day that we've had today on the US markets, but that is what it is. Similar to Afterpay, which I missed out on because it got bought out by Square. AFT Pharmaceuticals has traded sideways for over a year on me now. We're down 1%. That's fine. It's an example of a company where my original thesis still holds on it, but it's just been delayed due to the COOF restrictions. Next up, Beyond Meat, and the reason we probably have an unrealized loss on our position here. I've actually been nibbling a wee bit on this one. I've been buying a wee bit more, but yeah, we've had quite the dip recently, which is where I like buying, obviously. Still waiting on the short interest on this is getting quite high. Not that that's the reason I'm buying it. I like the company for the long term. Coinbase similarly has been trading sideways, and I've had a couple of wee nibbles. Crypto is actually going through a hell of a rally right now. So you can see if we go to the week chart here, it is ticking back up. So it'd be interesting to see how it performs over the next month or so. Next up, Corsair Gaming. I have added almost $400 to this position since the last update, and I am probably not done. I have probably explained it before. We've got a large VC company called Eagle Tree Capital or something like that are constantly selling off shares whenever it rallies, so it's artificially depressing the share price. The thing is horrendously undervalued, and the minute that they run out of shares to sell, we're going to pop off. Dropbox, actually down a little, which is surprising. It's been on a hell of a tear. I'm just going to hold this position. I think there's still plenty of upside there. Probably not as good of an opportunity as Corsair, but it's still, I'm just going to hold it. E-Road, I have finished building this position now. I only wanted that to be a small spec position and partly to support a New Zealand tech company. Yeah, probably I might add a little bit more to it, but I don't want this to be a big position. Hallenstein's also similarly I'm not adding to, but that's only because I've gotten to where I am happy with the position. The Warehouse Group actually came out with very good results in this month, and yeah, sort of gives me a bit more confidence in how retail in general has been doing throughout the lockdowns that we've had recently. Hallenstein's distribution centre is in Christchurch, and they do online sales, so hopefully they will be actually doing well through this lockdown rather than being too affected by it. Next up, Heartland Bank to the absolute moon. Now, I did a video on this 2 weeks ago, and then Henk Hustle did one the other day that was way better than mine and went way more in depth, and he knows how to edit videos and I don't, so it's objectively better in every way. So yeah, you guys should go check both videos out, but leave mine a like for the YouTube algorithm, because I need all the help I can get. Next up, we have another new value play, or value/growth play, in the Honest Company. It is a company that does nappies, baby products, wipes, and also a cosmetic range. And just based on valuation, they've probably got about a 50% upside on them, in my opinion. It is a company that's not profitable, but I do like to get in on companies that aren't profitable but are going to become profitable in the next 1 or 2 years, because a lot of people won't even consider buying something that doesn't have a P/E ratio on it, and a lot of index funds and that are not allowed to buy companies until they are profitable or have been profitable for a certain number of quarters. Similarly, actually, is Metro Performance Glass, which is due to become profitable. Well, was due to become profitable already, to be honest. We had a bit of bad news from them recently. They've had worse impacts from the COOF than was expected, so it's just taking them a bit longer to get to where they need to be. They are looking at paying a dividend eventually, but they need to get their debt under control first. Similar sort of scenario to, yeah, Honest and Corsair there. So, not Corsair, to Honest there. When they do become profitable, the share price tends to pop. And there was actually, I am down quite considerably on this now, because people were expecting that to happen a bit sooner, and now we've dipped. So I'm just going to hold that position. If anything, it might be I might top it up a wee bit. Oceana, I actually said in a video 2 months ago that I needed to add to this position, and I still haven't done it yet, because I really like this industry, and I actually want that to probably be about a $900 position. They pay a dividend, but it's pathetic. It's really more of a growth play than anything. Now, Seeker, you guys would have seen in the last, update that I did with my daughter that, yeah, I kind of copied one of her positions, because it's doing really well. It's done really well for her. I bought in just before the ex-dividend date, and it dropped after that. But bright side, we get our dividend soon, and that'll be reinvested, and I'll probably build this position a bit more. The last actual stock here is Tattooed Chef. I've added a little bit since the last update. As I said, I don't like the fact that I've got so much in Beyond, and I have this company in the same industry, so I'm probably not going to grow it too much more, unless I trim Beyond later down the line. I also did have VU, the S&P 500 index here. I sold that off to buy the dip on another company. And the notable two absences that are gone from this portfolio words, are Energy Transfer and Walgreens Boots Alliance. And I've actually done a video on Energy Transfer explaining how much I liked them, so maybe a bit surprising that they're both gone from here. Well, the answer is actually I took profit on both of those positions and then immediately bought back even more shares in my dividend growth portfolio that I'm keeping over on my Interactive Brokers account. So I just freed up a bit of money in this account to buy the dip on a few other things, and I have not. I've sold, but I haven't technically gotten rid of those positions. If anything, I added more to both. Well, that's about all we have time for this portfolio update. I hope you guys liked the video. If you do, please like, comment and subscribe, and if you want to sign up to any other brokerages other than Sharesies, I do have a Sharesies link down there as well. Check the description of the video. I've got a stake link there. You can get $20, 20 US dollars worth of a free share. If you're interested in crypto, I've got a crypto.com one there, a Coinbase one, and yeah, a few other things. You can get a wee bit of free money just from signing up to these things. Depending on the service, you may have to invest a wee bit, some of them you don't. But anyway, that's all we've got time for this month, guys. See ya!